Hello guys and welcome to this trading video. My name is Shane here at AwakeFX. I'm a full-time trader. I'm based in Ireland. I've been trading for over 15 years, and on this channel you'll find out information about trading, ICT concepts, live trades. So you can watch some live trades in this channel here as well. So make sure to subscribe if you haven't done so already. Now in this video, I wanted to discuss a few tips for you guys to become more successful in your trading. And it's going to be across three key areas. Number one, we're going to speak about A+ trades. And number two, we're going to talk about trade frequency. And number three, knowing when not to trade. Because these three things can make such a difference to your trading, right? Now, when I trade, I don't trade that often. So just to give you a little bit of an overview, I take between 4 and 8 trades in 1 month. Between 4 and 8 trades in a full calendar month. Now, I took a trade today, and if you stay till the end of the video, I'll show you that trade, exactly where I got in, exactly where I got out. So we'll leave that to the end, all right? This week, I took 3 trades. My first trade, I made 2 OR. My second trade was a loser. I lost 0.5 OR. And my third trade was a winner. I made just over 2 OR. So let's say 3.5 OR, just over 3.5 OR this week. Now, for some people, if you make 3.5 OR in a week, it depends how much you're risking per trade to determine how much profit that is for you. If you're risking $100 per trade and you make 3.5 OR in the week, you make $350. If you're risking $1,000 per trade and you make 3.5 OR in the week, you've made $3,500 per week. So really, the skill itself is the same for each trader, but the money you make is based on the size of your trading account. And obviously, the more capital that you have to trade with, whether it be your own or prop firms, and there's loads of prop firms out there you can use, that will determine your final profit that you make in your account. Now, one thing that I'm an advocate of is hunting for A+ setups. Now, what is an A+ setup? An A+ setup is a trading setup that ticks all of your boxes of your conditions in order for you to take that particular trade. So I believe that every student really needs 2 things to be successful in their trader. One is you need to have a process for mapping the market on your charts, a way to draw all your key levels. That's one process you need. And then number 2, you need a trading strategy, 1, 2, or 3 strategies that you use with a checklist that you hunt for at these key levels. Okay. Now, when you're hunting for A+ setups, what's going to naturally happen is you're going to reduce your trade frequency, which means you're going to trade less. You're going to trade less and less. Okay. Because you're not taking 5 or 6 trades a day. If you're looking for that A+ setup that ticks all the boxes of your strategy, you're going to trade less. And I believe the less you trade, potentially the more money you can make, because you're choosing the best possible trades, them A+ trades. And one thing to remember is that even an A+ trade can fail. Okay, so not every A+ trade will produce profit. They can still fail. But if you're taking B trades or C trades or trades that only tick 2 of your 5 check boxes, let's say, of your strategy, if you're taking these second-rate trades, you're going to lose more often. You're going to decrease your probability of finding winning trades, and you're going to be just working against yourself. Okay, so trade less, look for the A+ setups, and minimize your trading to only the quality setups. Okay, that is one way to advance your equity curve so much. Now, the other thing which a lot of people don't speak about as much is knowing when to not trade. Okay, you need to know the conditions when you should not trade. Okay, now you can have a perfect setup lineup. It ticks all your boxes. Okay, so it's looking like an A+ trade. Really, it's a B trade. And the reason why it's a B trade is because there's not enough range or not enough distance maybe to get to your target. Okay, so the entry might be good. It may have a high probability of moving in your direction, but perhaps the target, it doesn't give you 2 or more. And knowing to just pass on them trades, don't take them trades, will help you to keep the profit on the good trades and reduce the chance of you losing money on these poorer second-rate quality trades, you know? So A+ setups is what you want. Reduce your trade frequency and then know when to not trade. So guys, For those of you who've made it this far, obviously you're someone who's serious about trading. You've been listening to me going on and on and on about these little tips. I'm going to show you a trade from today, okay? What I took, how I got in, how I got out of the trade, and the thought process around it. So let's have a look at the charts. Okay, guys, so now we're looking at a chart. So this is a chart of the ES market, the E-mini S&P 500. Each candlestick represents 15 minutes. It's a 15-minute chart. And yesterday we had a kind of a huge sell-off here yesterday coming into the European session. Now the vertical line you see here is just a vertical line denoting 3 a.m. New York time, which is 8 a.m. in the morning for me here in Ireland and the UK. And the other vertical line here is 5 a.m., which is 10 a.m. for me in the morning. So I only trade between 3 a.m. and 5 a.m., which is the European session. So I was hunting a trade this morning. I have a specific process for mapping the market. Now, I haven't put all the key levels onto this chart here. I didn't want to confuse you. It is something that I teach on a market mastery program. But on my live streams, I do live streams where my students watch me analyzing the market live and hunt A+ setups. Okay, so it's like they're sitting on my shoulder watching me trading or looking for these setups live in the market. So if that's something you're interested in, check out. There's a Calendly link in this description of the video. You can arrange a one-to-one with me. We can have a chat and I can tell you more about the live stream service and the education that I provide. But moving on to this chart anyway, I was looking for a trade this morning. And just to simplify this here, I had marked up a buy side level here above market. Okay, so this is a buy side level above market. And I identified, if we zoom in here a little bit, this swing low here has been a significant swing low. Okay, this is a swing low here that moved up to this high. So we'll mark in a sell side level here. We'll make that red. That's the sell side level. And the buy side level above will make that green. We'll call it buy side. Okay, so here was the open. Okay, we're in bar replay mode here. I'm just going to rerun what happened here this morning. I was waiting for potentially a break of this sell side level here, for a potential run higher, because we had such a huge sell-off yesterday. Oftentimes the market may want to retrace higher some of that previous sell side action. So we move forward here. European Open happens. Price moves down. I'll just delete this vertical line and takes out this sell side area here. Now, I was looking at the market structure that was coming in down into this level here. So one thing on my program that I teach is a lot of education about market structure, but in a nutshell here, there has been a move down. We've moved down from, let's say, the swing high here. We'd moved to this low. We'd have pulled back into this high here, and we had moved lower to this point here. We moved forward the candle. We moved additionally lower here. And at this point here, we broke market structure. The market structure level here is the high of this candle. Let me just zoom in here. So the high of this candle here is the market structure level. And I call the MSS 15. It's the 15-minute market structure shift level. And we had a nice close in this green candle above there. That told me that this level here and the sell side has been bought into, and the fact that we've changed market structure is telling me that price wants to potentially move higher. So that was a nice, clean break there at the European Open, and I was hunting a potential trade. But it's not ready. It's not ripe, as I say. It's not a ripe trade. It's a bit like a banana. Would you eat a green banana? No, it's not ripe, okay? So this was a bit like a green trade, a green banana. I want a yellow banana to eat. I want something that's sweet and juicy. So what we're going to do here is we're going to wait for this trade to get ripe. So what I did was I zoomed down to a 5-minute chart. I used a 15 to 5-minute. I do all my mapping of the market in the higher time frames and work my way down. So zooming in here, we had this nice little push here. We broke above the market structure shift level here. And down in this push here, I could see that there was a fair value gap. Now, I have done videos about fair value gaps here on my channel. It's an ICT concept and it can help you in your trading. So maybe check out some of the videos about that if you haven't done so already. So I was looking for price to maybe pull back down into this area to take a potential trade. What I do is I draw up a Fibonacci from my swing low to my swing high. And what I'm doing here is I'm hunting in around this area for a potential trade. So we zoom out here. What is my target? The target is very important. My target is the buy side level here above. What I do here is I mark in my potential long entry. And I was risking 2 2.5 points on this trade. I was looking to get in here around this fair value gap. I entered just above it actually in this particular trade, I believe. Yeah. So I had a 2.5 point stop. I was looking for price to come down towards this fair value gap, 50% retracement, and then get a move up here towards these highs. Now, this was an A+ setup to me. Why? Because there was a very comfortable possibility of making 2R. So if price pulls back down in here, to move up and get 5 points, risk 2.5 points to make 5 points, that's a 2R trade, was very much possible. But I was kind of targeting this buy side level above. I knew this could go further. Now, I'm not looking to get out above the buy side level. Okay, let's not be greedy here, but get out somewhere before it. So I was risking 2.5 points to make about 7 points, which is close enough to 3R, 2.8R, this particular trade. So we're waiting here. And I'm doing this midweek, Tuesday, Wednesday, Thursday. I do this with my students live on the live stream. So you can catch similar type of trades. So we move forward here. What happened today? Price comes down. Bam. We bounce off this fair value gap. We hit this 50% level. You need to stop below this low here because there hasn't been a huge push here. So there wasn't a huge displaced move like this. So I was expecting that it could dip in a bit lower. That's why my stop's below the low. And I go through these details on my live stream really, really clearly in real time. So make sure to schedule a call with me down below. There is a Calendly link in the description of this video. So what happens next? We wait. We're in the trade. We're long. We've got a 2.5 point stop in this thing. Price moves forward. We move sideways. Great. We're moving up towards target. Price is doing its thing. This buy side level up here is the magnet. And I speak about this in my live streams all the time. Where is the magnet? Magnet. We want this thing to go to the moon. Okay. We want to get a magnet here. Where is my bloody magnet? Boom, there we go. There's my magnet. So I have a magnet up here. So I believe that up here above this buy side level, we have a magnet that price may want to be attracted up to this buy side level. That's the liquidity area. And I'm looking to get out before that because I'm not going to be greedy. So we wait and price moves up. Boom, we hit the area. I get out. Yes, it goes for much more. Fair enough. I'm happy. I get my 2.8 or I'm done for the day. And then that's my A+ trade. I get in, I get out. It must be clean. This was a very clean setup. And if it's not clean like this, I don't take it. All right. So if you'd like to be able to catch these kind of setups in real time, make sure to book a call with me. I know I haven't posted as many videos recently. It's really because I've been putting all my focus and my energy on my private students and I'm working with them daily. Like I live stream 4 hours per day. The European Open, the US Open, Tuesday, Wednesday, Thursday. That's like what? 12 hours per week. So I'm doing a lot there with the guys. So really hope that you found value from this video. I've shown you a trade. I've given you some tips about finding A+ setups. You need to have a strategy. You need to have a process that you follow. This here is a very much a simplified version of what I teach. I have 3 different strategies that I do teach, but I do a lot more mapping of the market that's not here. I don't want to confuse you because it can be quite confusing if I put all the key levels. What's this, Shane? Why is that there? If you do sign up for the program, I'll show you everything on the inside, But look, thanks for watching. I do appreciate each and every one of you on this YouTube channel. There's a lot of content here already that I think is very valuable to your development. And if you have any questions or there's any videos you'd like to see, give us an comment down below. And thanks for watching. Take care, my friends. Bye-bye.